Great, thank you again, and good morning, everyone. For those of you in the audience in the hotel, and those of you participating online. I have a great number of panelists here. As you can see their names. My name is Wander Meijer, working for GlobeScan, a research and insight consultancy, a global one actually headquartered in Canada. And today we're going to talk about carbon reporting and ESG investing. Now that doesn't sound too exciting or perhaps too lofty for a better world. So what I'd like to do is to give you a 5 minutes context, the slides, a bit of what we are talking about today. And then I have some questions to our guests, which have been introduced already, and which are specialized in the topic of ESG investing and reporting. Let's first talk about what actually we want to achieve. The world we want, and actually the whole, call it business of sustainable reporting, started in the 80s with the Brundtland report, Our Common Future. And then you could see throughout the history, we had the Earth Summit in Rio. We had, of course, the Global Reporting Initiative headquartered in Amsterdam, starting in 1997. We had the Millennium Goals from the United Nations with the Global Compact. We had the B Lab, the B Corporations. Then we had the Rio in the United Nations Conference. And then, of course, we had the famous Paris Accord in 2015, which is working a little bit, but still a long way to go. But the most important thing was in 2015, we established 17 sustainable development goals. And with these goals, we try to achieve a better world by 2030. A world with lower carbon, a world with more inclusion, and a world with less pollution. And what we do there is, of course, if you look to this, to create a better world, we have, as we call it, an ecosystem of stakeholders, and in which we believe as GlobeScan that business is the key, I would say, constituent, the stakeholder. And all these different stakeholders have an impact on business, and business needs to react on that, as at least they have the scale and the resources to change the world, to make it a better place. So you can see here these 5 stakeholder groups impacting the business, and then later on with the panelists, we're going to talk about this business. So first, of course, we got scientists and academics. And as we all know, in so many reports, the scientists and academic communities are constantly trying to tell us what the world, how the world is faring, or how it's not so good faring. And the media is echoing the urgency. And of course, the media here is not the fake media that we often talk about. The media is reporting what science is telling us. And they're telling us actually that the world is not going into the right direction in many ways. But what we talk about here is the ways about the environment, but also a bit about the S from ESG, the social part and the governmental part. So scientists and academics point us the way how to change how we behave in the future, especially from a business perspective. We have NGO and activists. And of course, there's a wide range from being very activist to being more corporate, but all these social movements, they're trying to push the world into a better direction and to see actually how we can change the world and avoid climate change. We've got ourselves, we've got customers and consumers, and increasingly people, younger people particularly, acknowledge that we are going into a big issue, that we are going into an issue of a world where, again, carbon is getting to such a high level that the temperature is increasing and the world becomes inhabitable. So we have to change our lifestyle, we have to change the way we eat, travel, and behave. So again, corporates should act accordingly and address these and work together with consumers and customers. Then very important, because now we're going to the core of what we want to discuss here today, carbon. You know, we talk a lot about carbon, and of course it is sometimes, it sounds perhaps a bit far away, but of course in Hong Kong, living in Hong Kong, we see it in our air every day, especially in the winter. The good news is now that actually all the governments, first of course the European Union came up with a Green Deal, is to decarbonize the economy and to green up the way we work, green up the way our economy is being run. And this is recently being taken up by Asian governments. In China started with 2060, just 2 months ago actually, to be carbon net zero by 2060. It was very quickly followed by Korea, by Japan, and even Hong Kong now wants to be net zero carbon by 2050. So a lot of good initiatives from the governments pushing harder than they've done in the past. So finally, governments at least are pledging to take action to mitigate climate change. So with all this, of course, the financial industry and our esteemed panelists are all working for the financial industry have a role to play. And ESG, the way we report how companies behave in the context of environment, social and governmental, how they behave, how it is being reported, I mean, that's really changing, I would say, recently. And stock exchanges are setting rules. It becomes like a very serious reporting, and it's becoming a tool, a way to change the world, actually. So whoever thought that reports could change the world? Well, perhaps our panelists can, because they all work for this financial industry. And I would like to discuss a few things in the next 40 minutes. Things like long-termism, things how we can accelerate action, things how Asia can perhaps take the forefront rather than lagging behind Europe as in the past. So from here, I'd like to go to our panelists and talk about this ecosystem, the people coming from the financial industry. So within this ecosystem, I think, again, Agnes, Kate, Leonie, and Sabrina, you all in your companies have different roles to play. So can you explain a little bit, if you look to this ecosystem, and we talk alphabetical, we start there with Agnes Tai, can you explain a bit what your company is doing, but particularly what your role is in driving ESG forward and hopefully changing the world? So Agnes, over to you, and then I'm going to ask questions to Kate, Leonie, Sabrina, and well.
Thank you, Wanda, and thanks to HERA 2020 Forum for having me. I'm Agnes Tai. As you can see from the slide, I'm a senior partner of Yaozhi. Senior partner of Yaozhi Asset Management International, which is the global facing arm of Yaozhi in Shanghai, a recognized fund house in China, China's fixed income markets, particularly since 2011. So in Hong Kong, we are in the process of applying to become a UNPRI signatory. Although this has to go through the headquarter level, and so we are in the communication to try to make this happen next year. So in Hong Kong, because we only refocused on equities mid this year, we are very strong in fixed income. And so with my background of having started investing in doing sustainable investing since 2010 for our family office, our focus now is on Greater China equities, particularly on ESG, low carbon, and low temperature. So here, to contribute to the ecosystem, we looked at a lot of companies, of course, at the ESG reports, and also we will be engaging with companies as a fund house. And so by launching and producing products, offering products that are genuinely addressing low carbon and high ESG in the future, we hope to contribute to this whole ecosystem by bringing capital to the company that are already very good in doing ESG practices, and to support companies that are transitioning through the different shades of green.
Excellent. So you're bringing actually money to companies, or you invest in companies who are trying to contribute to a better world, which of course is a crucial function. Great, Agnes. That was on. Then we go on to Kate, and you come from a legal company. And of course, legal firms are not always immediately connected to combating climate change. So please explain your role in there.
Thank you very much. Yes, I'm Kate Hodson. I'm a partner in our funds team, but I'm also head of ESG funds for the firm. And essentially, we are playing a role as a service provider, as an advisor to clients in the financial industry who are actually looking to incorporate ESG into their practices, investment practices. So an example is that we've set up a sustainable investing and impact funds dedicated legal practice to help support and work with and give dedicated support to funds that are looking at this space. Our finance team are working with banks which are looking at developing sustainable linked loans. We've got lawyers who are working on green bonds. So lawyers have a key role to play. It is essentially layering up on additional skills that we already have. But I think we definitely can add value by having specialist knowledge in ESG rather than looking at it as just another legal service that we do. And so OSIA has perhaps taken a charge in the specific area that we work in to really try and be a leader in this ESG advice. And so we've got a lot of internal work going on at the moment to make sure that we have this available across service line, across jurisdiction. We're also looking internally at our own firm, and I think that's one thing that's pretty interesting to see this development, this trickle down effect, as it's not just the companies doing the operations, doing the business. Actually, it's also service providers that are increasingly under scrutiny. We recognize that, and we are in the process of implementing our own environmental management system. And then finally, to really give credit to all the work that we're doing and that we want to do, we have built an ESG consultancy practice, which actually we've invited Leonie, obviously, well, you've invited Leonie on this panel to represent that arm of our business. And I'll leave her to speak a bit more about that. But essentially, I think a lot of this comes down to what is our value as a law firm. And the current leaders in the business feel very much that we want to leave behind a law firm which was better than we found it. And so there's a lot of work that's going on at the moment, which is all very exciting.
Excellent, Kate. And of course, also as a company, I'm sure you want to leave the world behind better as you found it. And that's how all these companies are trying to contribute. From there, I think, Leonie, you just joined OGA, but also you worked for the past for the Sustainable Finance Initiative, which is trying to promote sustainable finance initiatives, as it says, in Hong Kong. So talk a bit about that too, as you can, to see how you have been working in the past 4 or 5 years to further promote the ecosystem in Hong Kong on sustainable finance.
Sure. Thanks, Wanda. Before I do that, maybe I just make a connection to what Kate was mentioning. So my role today is very much within OGA to help build out our advisory practice to support our clients to think about ESG and impact integration. So that can be everything from your governance strategy, your investment practice, your risk management framework, and eventually how you disclose and report on that. But coming to this position today, yes, has been built upon my career in sustainable finance in Hong Kong. Has been nearly 5 years now, helping build out the Sustainable Finance Initiative as well. So some of you in the room and online may know SFI is a local initiative that works across Asia, really to incubate and support the growth of impact capital, to help educate and advocate for a shift in investor flow capital towards sustainable finance amongst wealth owners in Asia. And that's been built upon the success of RS Group, a family office here in Asia that have achieved 100% sustainably invested portfolio. So I suppose with that in mind, we are seeing the growth of ESG and impact within Asia developing very fast in 2020. From the private wealth side, high net worth individuals, and also that's having a trigger effect within the broader financial markets with asset managers, financial institutions and corporates alike looking to think about, well, how do they now start to manage those ESG risks and also identify the opportunities?
Excellent. Thank you, Leonie. And then I'd like to move over to China. Sabrina, you're in the mainland and you work for CDP. That's a bit different organization. I mean, it's a non-profit. So explain a bit about your organization and your role in the whole context of ESG reporting.
Yeah. Thank you, Werner. Happy to join this event, represent CDP here. So CDP is a global nonprofit organization, and we are headquartered in London. In Asia Pacific, we have the Beijing office, Shanghai office, Hong Kong office, India office, and Tokyo office. So we have pioneered and provide the world-only global natural resources disclosure reporting platform since 20 years ago. And we believe that the measured transparency and accountability drives positive change in the world of business and investment. So in China, we mainly work on the three pillars in terms of ESG investment. First, as you all know, the mainland China is a very much top-down approach. So we work closely with the government and to provide the technical support on the mandatory reporting policies, and in line with the global mainstream reporting framework. And on the investor side, we work with investors on the ESG integration strategies, and also on the stewardship engagement, as well as some data-oriented research. And also there's a strong request on the modeling data from the China mainland. So that's all our focus. On the company side, there are a lot of requests on the capacity buildings to be better prepared for the upcoming policy framework. So, and also there's a lot of company interested in the TCFDs. So we have the pathway of TCFD series of capacity building events in line with that. So that's our our work here. Thanks.
Excellent. Thanks, Sabrina. What I'm going to do next actually is to go a bit from one person to another asking different questions, and to see how it gets from there, to go a bit through the whole topics what we have here. Now, we all talk about ESG reporting getting more mainstream, and we talk a lot about carbon. But at the same time, when I listen to a lot of these discussions, it still looks like we are actually at the beginning of it. You know, we are not even close to decarbonize the world. I mean, the emissions this year reduced a little bit, but that was only because of COVID-19, not because we have fundamental changes in our world. Maybe Agnes, let's start with you. I mean, you said you're investing in companies who try to create a better world, a world with less carbon. So how is this accelerating in terms of investment? I mean, if you look to the capital you have put into better businesses, I mean, is there really a growth, or is it still difficult to find these companies to invest in? So where are you now, and what do you see going forward quickly for the next couple of years? Are we really seeing a sea change? Are we seeing a fundamental disruption of the old business?
Well, when I started direct investments in private projects back in 2010, and actually a little bit before that, but officially 2010, well, there were very few good projects in Greater China for us to look at. And of course, if you've chosen the right ones, there are, you know, fantastic returns. But currently, my focus is on listed equities, and because my PhD studies is also on sustainable investing. So I look at a lot of ESG data and ESG reports. And so now I found that ESG reporting, at the beginning when I first facilitated training for the HKIOD in 2014 on ESG reporting and sustainability, the questions came mostly around what are the templates, how to whittle in the templates. But now I am very happy to see that this whole thing, ESG reporting, has evolved, and to the point now, CLP is saying create your own sustainability report online. So and we know that the quality of ESG reporting has so much improved. Now we know that ESG reporting is not just about filling the blanks and putting up the reports to satisfy the stock exchange requirements, but actually reporting what you as a company has been doing and what you aspire to do. What are your challenges? What are your targets? What are your goals? Where are you? And how are you going to be achieving those? And we know that the stock exchange is going to be asking companies soon. I think this year they asked the companies to report on how climate impact their business. But I suppose, and I expect that very soon it will be a mandatory requirement to report climate and other data according to TCFD recommendations. So this whole thing means that the investors, the regulators, and then the lawyers and the NGOs, they're all trying to focus on an issue which is very pertinent and very important to us. So if we look at the current trajectory of climate, global warming, by the turn of the century, 2100, my children, my grandson would still be alive, but the earth may not be inhabitable. So what are the future generations that we can pass the business to, the wealth to, the wisdom to? So ESG reporting plays a really good role in telling us, in showing how the companies are actually practicing ESG, how they're prioritizing, and also to help to be role models. Some of you who are getting the awards here today, you are role models for your peer groups. And so together, the whole ecosystem can improve, and together the world will be better.
Excellent. So what you're saying is, yes, indeed, ESG reporting and rewards can help the world to make a better place. Kate,
Absolutely.
how legal, how lawful is this? I mean, what happens if companies who have to do an ESG report deliver a shitty report, you know, if it's not up to standards? I mean, what happens from a legal perspective or from a Hong Kong Stock Exchange perspective? What are the repercussions?
So I think we have to look at this in the context of these different waves that we've been going through. So yes, we're improving the standards that we're reporting against, because there's so much that goes into this, as Agnes was getting to, that it's not just about sort of producing data, it's got to be good quality data. We've obviously got to be in a position to read that data, understand it, and interpret it. The data needs to be comparable. So we're basically in a relatively short space of time trying to fill in all these gaps to move us on quickly, because unfortunately we have just started too late. Essentially the world has woken up to this far too late, and given the science that's been out there for a long time. The analogy that's been made obviously is with the development of accounting standards. That took time. We're on this journey. And so, but yes, to your question, I think law and regulation is now coming in to help accelerate that, to help hold companies to account. So we're moving from just voluntary standards to more mandatory ones. And so, yeah, the Hong Kong Stock Exchange is an example of that. And of course, whenever there is now a regulation where there is a strict requirement, there is now recourse if you breach those requirements. So, and this is not just in the Hong Kong Stock Exchange, this is actually around the world. So obviously in Europe, we're seeing big regulatory changes happening and coming through next year as we move to have a taxonomy in place and disclosure regulations. The other big development, which is obviously close to my heart as a funds lawyer, is looking at the new consultation that's out, that's actually going to have specific requirements on the asset management industry. Never before has Hong Kong come in and said to asset managers, you have to think about the environment, but they're doing that around climate change. And there will, of course, be recourse if firms are not going to comply with that when it becomes part of law. So I think it's a really interesting progression, and I see it as an accelerator. It does mean that perhaps companies that were starting to think about this now are beginning to say, okay, right, this has caught up with me. It's time to start getting advice or to look internally at what we can do.
And of course, from there, thank you, Kate. I'd like to go to Leonie. I'm still following the same sequence, but that is because it follows on each other. Leonie, you worked 4 years for the Sustainable Finance Initiative, and you just moved on to OGA. Was your work finished? Is Hong Kong on track?
The work will never be finished. The aim is to make ourselves all unemployed, although in sustainable finance, eventually. But I think just to maybe take a step back from just zooming straight into ESG, I think it's important to put this in the broader context of why are we talking about ESG risks and opportunities today, and how do we actually define it? Because this has been something that has, led to the regulation legal effect in the market, the need to increase comparability, because we've had many different jurisdictions come out with different terms and thinking around what we're really referring to as ESG. But we look at really as three defining characteristics in ESG. You know, the focus on long-term sustainable returns, and defining it as really a stable, well-functioning and well-governed social and environmental economic system is fundamentally what we're trying to strive towards as we build sustainable, resilient economies. So for us, and I think the broader market is starting to really correlate around this thinking that responsible investment, if we call it that, is really the investment strategy where we can integrate the ESG factors, so the environmental, social, governance factors, into our investment analysis and decisions. And that's kind of having the ripple effect for corporates and organizations to start thinking about disclosure from ESG to sustainability factors. Because what it's doing is recognizing really that those ESG factors, they can have an impact on financial value and have an impact on the investment decisions that we're making as investors. And that's something, you know, I think from our experience within Sustainable Finance Initiative, where we're starting to see that shift in investor mindset towards long-term thinking and long-term value, that, you know, not just private investors but institutional investors as well recognize this as an opportunity. It's not just a defensive strategy with our investment portfolios, but it's also a strategy to integrate opportunity into our ESG portfolios today. So it's very much at the core of investment, and it's, you know, we always say at the Sustainable Finance Initiative that our goal really is to make sustainability synonymous with finance. And that's fundamentally what we're trying to do in the broader markets, whether that's on the legal regulatory side, on the investment side, or within, you know, NGOs as well.
Great, thanks, Leonie. Our panel today is about, of course, ESG reporting, but also in the title is carbon. And I haven't figured out myself yet whether carbon actually is a swear word, a bad word, or a good word, because you can look at carbon in many different ways. But Sabrina, you have carbon in the name of your company, of your organization. So first of all, explain a bit more to the audience, how does carbon or decarbonization fit into, I would say, the future of ESG reporting? I mean, what are you actually reporting on carbon? I mean, most people know it from a perspective, but can you make it a bit more concrete? How does carbon fit in ESG reporting?
Sure. Well, our organization named as Carbon Disclosure Project at the beginning, 20 years ago, but then gradually cover more broad of environmental issues, including climate change, energy, water, those type of things. And then so we just rebranding like CDP's global reporting platform. But of course, carbon is a common focus all around the world. Not only from the quantity side, but also from the quality side. For example, the carbon emissions, the scope 1, 2, 3 data is most favorable use of data from the global database from all type of different stakeholders, including investors in their developing the ESG strategies. But also from the governance side, like who is involved in the carbon management in the company, is at board level or project level. We see that is obvious difference in the practical ways. And from China mainland, there is particular drivers on the carbon disclosure, because we have the national carbon ETS, emission trading scheme is underway. So that's cover all the power companies and another 7 industries. Accumulatively, that's cover about 3,000 companies in China. So that's a big focus on it. That scope globally, we have been support different investors to integrate carbon as well the other ESG factors into their products, particularly on the EDF products. Our reservation is that the EDF products in that with the ESG outperformance 5% than the regular products in the 5 years on average. So that's obviously kind of better motivation, more investors to do the work, particularly with the impact of the COVID-19 pandemic. The performance is even better during this time for those have been embedded ESG factors. But as NGOs, we see that like more like long-term missions on driving sustainable economies, and ESG factors certainly mobilize or unlock the more capitals to flow into the direction into more climate-friendly ways.
One question, and then going back to the other panelists, one more question to you, Sabrina. You said, okay, there are 3,000 companies now, especially power companies in China, being on the emission trading system, which is being experimented. Does it have an impact already? Are companies really changing behavior because they have to pay for their emissions? Has it a really factual impact?
Well, I think that's related to the MRV mechanisms in China mainland. It also depends on different company strategies. Some of company is more active to participate in trading systems, and some of them are more proactive in the technology innovations. So they may not have that we call CCERs, that's a trading alliance in China. So I think it depends, but it certainly has a long-term impact on the company strategies on the carbon management.
Right. And hopefully this will align with the carbon border adjustment measurement which Europe is trying to implement. So that will also have an impact perhaps on Asia. So we talk a lot about carbon, and I think we can talk a bit more about carbon. Leonie, you had some carbon ideas as well. You want to bring it into your perspective from the finance. So can you elaborate a bit on the points Sabrina just made?
Sure. I suppose just to build upon the carbon disclosure project, it's interesting to note, even in Hong Kong, with the latest changes put forward by the Securities and Futures Commission, the significant focus on climate-related risk and fundamentally carbon, our greenhouse gas emissions, scope 1 and 2, and how we account for those as companies reporting and disclosing. I think why is this strategic focus on climate-related risk now coming into play is because of the financial impact on asset valuation. And I think we've become increasingly aware that climate change really has the potential to destroy, as far as I'm aware, the current statistic is over 70 trillion in global economic wealth by 2100. So I think with that in mind, investors are now demanding, and also, you know, I believe the statistic from CDP is that over 500 of their investors requested environmental data be disclosed by companies. So I think with this happening, we're also starting to see that increased empirical evidence come into the market that climate change really can have an impact on our financial valuation of assets. But the focus on climate and carbon is fundamentally because as we really redirect our capital flows away from the low carbon economy towards a more climate resilient economy, obviously that transition is going to render carbon intensive business models invalid. So what will happen then is that we'll witness really the impact of stranded assets. And I think that's why we've seen such a strategic focus moving from fossil fuels towards a more transitional economy to think about how do we build these low carbon technologies in the field to help us meet our Paris Agreement goals as a country, as an international region as well. And this is really why also we've seen the financial markets really take a keen focus on the climate related risk. You know, we've also seen evidence come out, I think it was earlier in the year, by the World Economic Forum pointing out in their global risks report that climate change is one of the top risks that will affect us in the next 10 years or sooner. So I think we're seeing that data come through significantly. There's a lot more to say beyond carbon, but I think we'll just pick up on that point for now.
So Wanda,
Please,
carbon and climate change seems such a long-term thing that it doesn't matter, it doesn't bother us right now. So Leonie touched upon a long-term versus short-term, and Sabrina talked about how important carbon disclosure is, and a lot of requirements or requests now. So I was reading reports that by 2050, only 25% of the coal assets will be utilized. And so what happened to the other 75%? So portfolio managers are very aware of this, and we're thinking constantly, where are going to be stranded assets in our portfolios, or should we avoid them? Should we divest? Should we keep them and help the companies transition? Now we have a wonderful case in Denmark where a company whose name I should ask you, Vonda, to help me pronounce. In English, we call it Ørsted, but in Dutch, it doesn't sound the same.
In Dutch, we also call it Ørsted.
Ørsted, really? Okay, thank you. So it's transitioned from an oil and gas company in 2007, many years ago. When it tried to list in 2007, it wasn't successful. And now today, they are the global giant of wind energy. So they beautifully transitioned. So we as portfolio managers, when we look at carbon, when we look at climate change, we're looking at companies that not only commit to their ESG practices now, and E is a little bit different from climate because a lot of companies might just focus on polluting or pollution, where in China, the companies are required to report on the pollutants this year now, mandatory, everybody. But since 2016, the larger companies and highly polluting companies have been reporting. So when we combine climate pollution and all these, we can see from MSCI report that the S and Gs really manifest themselves in short-term events, but the long-term erosions that come maybe as long as 10, 15, 20 years later could be associated with the E and the climate factors. So that's why it's so important now for us to put climate into the ESG reporting, so that it will help us, the investors, asset owners and asset managers, to make useful for us to make informed decisions.
Maybe I can add just one.
Sorry, 1 minute, Kate. I mean, I like the example of Ørsted, which actually was a Danish fossil fuel company changed to renewable energy, indeed, about 12 years ago. I just saw a statistic. In the last 5 years, their stock price rose with 349%. Yeah, so 3.5 times more expensive than 5 years ago. And then the other ones like Iberdrola, which is a Spanish energy giant on renewables, and some others, all grew tremendously. And on the other side of the graph were the fossil fuel industries. The biggest one went down was ExxonMobil, who lost, to be exact, 52% over the past 5 years of their value. So more than half lost of their value. And it used to be the most valuable company in the world. And Shell lost more than 30%. So these companies, basically, if you invest in fossil fuel companies, even though you're the climate activist, you will lose your money. That's the reality, right?
Yeah, absolutely. ExxonMobil just got taken out of the Dow Jones 30 index. They stayed there for 92 years and they were the last one to be off. So yes, but there was another report on the Swiss portfolios. Mainly you understand that the sovereign wealth funds and the pension funds are very large, but the question is, where did all this decarbonization of portfolio, where did the carbon go? So it was very interesting to see that actually there are still some passive funds and other fund managers who still are not shy from investing in fossil fuel companies. Now to you, Kate.
Yes, Kate. I don't know where all the carbon goes, but I'm sure you have more points.
Yeah. Well, no, I was just going to bring in, so I mean, it was only in 2015 that we had the Paris Agreement, and we actually had it laid out in this, all these countries coming together and agreeing that finance was at the heart of the solution ultimately to rectifying the environmental degradation that we've seen. And so actually, if we can look back and see what's been achieved in this last 5 years, it actually, there's a huge amount done. Of course, we know there's a huge amount more to do, but it is this inextricable link between finance and carbon, which I think is why obviously we're here today to talk about it. But I mean, maybe we can use this as a segue to really talk about opportunity. So to begin with, there's obviously been a huge focus on the risk that has brought to our businesses. obviously stranded assets being one of them. Banks are being put under a huge amount of pressure to obviously look at the exposure of their assets to potential climate change risk. But of course, we're now in this new wave where there's a greater recognition of opportunity. So it's really nice to see that we're already at that kind of positive signal stage. And the amount of, the volumes that we've seen being poured into ESG investments this year alone has been, really quite staggering. But that, I have to say, that comes with a health warning, because just because we're seeing huge amounts of capital going into ESG, that does not mean that we're moving the needle in solving the world's problems. Companies might start behaving more responsibly, but in terms of addressing issues like climate change, we actually need to see more finance going into actual solutions. And we've heard this obviously repeated number of times, that we're actually, the volumes of finance we need going into solutions is in the trillions of dollars. And that needs to, there isn't enough public funds, and we need to see that coming in from private finance.
Right. I have a lot more questions, but I need to close in about 5 to 10 minutes. So I've got one question for Sabrina, and then a question to all of you. So first to Sabrina, I mean, of course, you're working for the Carbon Disclosure Project, but what's beyond carbon? What's in climate change? I just got a brilliant question coming from the audience. If you think about the future of reporting, we talk about carbon, we talk about climate change, but what are the other areas which are becoming very apparent in the whole environmental issues or social issues? What are you more looking at in the future of reporting?
Yeah, that's a great question. Carbon certainly is a common focus, but based on our reservations, we see that the water-related issues also have increased 50% of the concerns or questions from the investors, societies. And more significantly, we see that the questions related to the soft commodities, such as the sustainable palm oil, soybeans, timbers, that part of questions has increased by 70% in in the Greater Asia area. So that's kind of the also common concerns in addition to the traditional climate and energy issues. So that's obviously some new trends. At the meantime, we receive more investor requests to focus on the transitional risk from the companies. It's including the physical transitions, as well as some like the opportunities to identify some new technologies, to identify the new service in the industries. So they would like to build it in their ESG integration process. That means the investors understand certain industries are high emissions, particularly for those thermal coal-related industries, but they also care about their strategies in long terms and their way for low carbon transitions in the future. So they can have like overall pictures in terms of evaluation and assessment.
Excellent. Leonie, so water, of course, is one of the biggest issues coming up too. We all know that, and the world is getting drier, unfortunately. Leonie, one quick adding to this addition?
Sure. No, I agree with Sabrina of CDP that we've seen that shift in company and investor appetite really from, I suppose, black to blue, black carbon to blue onto water. But I think we're also recognizing that increasingly we are an interconnected society. And a lot of our focus has been on now how do we account for that in terms of the impact that we're having beyond carbon, such as the impact on biodiversity, and the financial sector actually recognizing that really biodiversity risk is a significant risk as well to our financial assets and valuation of those. And we're seeing a significant focus on this from initiatives coming through from the United Nations as well, with the Deal for Nature, for example. I know Kate could talk to a lot more around this on behalf of WWF as well and the work that they are doing, but I think we're going to see that focus significantly in 2021 to bring us on to the biodiversity focus and also around social risk factors and how do we account for those as we try to recreate I say recreate, but remodel perhaps towards a more resilient economy in 2021 post-COVID-19. I think this will be a significant focus for investors too.
I had one last question, but I have another one before we go there. So Kate, because I think Leonie mentioned biodiversity and the business for nature. So how does this all fit into that? Because of course now we're going to almost like call it an NGO world, which is of course good, because I do believe that there should be more overlap between NGOs and businesses and governments. But the mention just made, from carbon to water to biodiversity and business for nature, please explain the link.
Well, I mean, I was going to say, I feel like this is a massive topic that we were just opening up at the end here, but very short. I mean, I think, okay, let's just put it this way. I think this year we have seen that the link between resilience and nature is at the forefront, and what COVID has probably done for us is showed us how very quickly the balance in terms of humans and our own survival can turn if we don't start respecting nature. So I think, I mean, in a nutshell, maybe that is where start of the focus has been seen. And I do think the biodiversity has not been concentrated on enough, but COVID, I think, has helped to bring it to the forefront. And so that is definitely going to be an area that we will see greater focus on going forward.
So just to quickly pick up on that, like in practice, what we've seen the focus on climate and then the translation of those into standards, being the financial related climate disclosures, TCFD. Now, what we've also seen happen at the end of 2021 is the task force on nature related financial disclosures. So certainly from that perspective, I think corporates are going to have to start quickly looking at these two on the back of TCFD as well.
So for those of you, the audience, actually it's amazing. The audience is expanding during this webinar. Normally, as you see people dropping off, but now we've got more people than when we started. So that's great. And for those of you who are looking for a career, reporting is it. You can see that, because we go from ESG reporting, we go to the TFCD, now we go for the Task Force for Nature Initiative. So there's an awful lot more reporting. And eventually, hopefully, this will all create a better world. Now, talking about the better world, and this is my last question to you. It's a bit more of a personal question. And I give you each half a minute or a minute, perhaps. Of course, you all work one way or the other, indirectly, directly, for the finance industry. And the finance industry has gone to the history, also if you look to movies, from very bad to very good to okay again. You know, we had the Masters of the Universe in the 80s and the 90s when people were creating money out of nothing. And then we had, of course, the enormous financial crisis in 2008. So then basically the finance sector became the bad guys of the whole world. But now, if we listen to all of you, you seem to be the good girls of the new world, of the new economy. So how is this related? How are you experiencing this yourself? I mean, maybe 10 years ago, when you went to a party, you worked for the finance industry, you're being seen as a villain. Is it now that people see you more as a force for good? I mean, is it something what it's being more acknowledged by you see it yourself, but is it also be the broader, I would say, business community, the government perhaps, or even NGOs? They see you now as a force for good who can help to change the world. My last question to you.
Who to first?
Sorry?
Who's the question to first?
The question was too fast?
Oh no, who do you watch? Like, I'll take the first go then. So I think, look, I mean, I don't think, unfortunately, I think lawyers always have a bit of a bad rep, so I'm not sure that I've cleansed it just by going into ESG. But look, yeah, you said personal question. So personally, for me, yes, it has been a chance for me to use the skill sets that I have developed over the years of being a lawyer to do something that I feel really passionate about and that I think is really important, and that is an incredibly valuable thing to have. And I think you're seeing so many people pouring out of the financial services industry at the moment, trying to find an avenue where they can get involved in this. And it's, I mean, that's a huge trend at the moment, isn't it? And I say trend, I don't think it's going away. And another interesting point, if you just look at our panel full of women, actually, it's the one area in the finance industry where you see women not dominated by men at the top. And so that is actually, I think, another really positive aspect of this, and that can be very encouraging for, you know, for women who are looking to get into this part of the business.
I can only agree. Up to somebody else of the female panel.
Completely agree with Kate. I think we've seen also the it's interesting if you take a step back from, I suppose, women in ESG and the number of female-led initiatives that we do see in the industry. I think it's also reflected actually with investor demand. So some of the stats coming out from the banks and private banks to date, take for example, Standard Chartered, UBS, have all reflected that their increased client demand is actually coming from young female millennials to invest responsibly. But it's not to say that males aren't caring about this. They are. I think we've just seen that focus and that shift start to happen within the market. And I think more broadly, we have seen a shift to thinking about not this just as reporting, right? Reporting is an output. I think we've all started to recognize that sustainability is very personal. You know, it's how do we invest our pensions? How do we, you know, decide to pick up plastic or not? And I think because it's a very tangible thing that we can, as an individual, be mindful about, I think we've started to see individuals within their day job looking to practice that too. So from our side, you know, and what we see as well is that we want to increase the talent working in ESG. It doesn't necessarily mean you have to switch out of a financial institution to do that. Actually, the biggest delta that you could probably have is to stay in that financial institution and shift the focus onto long-term thinking around ESG.
Excellent. Sabrina, how is that in mainland China? I mean, what we're talking here is out of Hong Kong and also from people who have been born and raised partly elsewhere. What's your perspective? Is it the same situation in China?
Yeah, I think that's an interesting question. I think 10 years ago, I was in DC and no one really talking about green finance. They feel that's a color and one talk about it. You know, banks and insurance companies talking about equity principles, and in the market, I think only KLDs and some school-oriented fundings are focused on it. And now it's really a kind of hot topic in China, at least in the first-tier cities like Beijing, Shanghai. And I think we are in a strong momentum to push things forward, particularly with President Xi announced the carbon neutrality goals. And the government immediately saying that they increase green and low carbon investment by 140 trillion RMB before 2060 to support this initiative. And on the other hand, we have the 14th five-year plan is in plannings and also support the goals, you know, to reduce the emission and reach the peak by 2030, and certain major sectors will certainly face the new opportunities like energy, transportation, constructions, and industries. And from the capital market, I think that's also an opportunities. I think within the deepened reform of the China capital market, investor would be another powerful drivers to be more engaged and also involved and support the low carbon transition. And certainly with the global green recovery, I think it's more important to making ESG factors more significantly in standardizing and regulating investment in the whole society.
Excellent, Sabrina. Agnes, we started the panel with you, and I'd like to give you the last word of the panel until I say a few last words myself. So maybe your perspective on the whole thing, going from the masters of the universe to the bad guys to the good girls where we are now. What's your perspective?
Well, there are good guys and good girls, right? So I know that Kate said that this is one area that female don't have to be the second in charge. The male is not dominating. But I'm also noticing that during the past few years, when I serve as the ESG sustainability expert judge for the Benchmark Funds of the Year's Award, those who came to present their ESG strategies to us and answered questions really well tend to be the guys. And I understand that with the private equity firms, like 10 years ago, they already put in ESG as a criteria for the investees on them for further investing or not supporting them. So, and those were led by guys. So I'm very encouraged to see that some of the large corporates in Hong Kong have sustainability directors and leadership of men. So it's quite, so I think that the female a little bit, maybe they are more vocal and they are more articulate in this topic, but quietly, I think there are a lot more men who are doing it as well from a few years ago. So this is a very encouraging trend to me. I think it doesn't matter whether we are male, female, or NGOs or private equity or listed companies, lawyers or service providers or whatnot, or government. So as long as we all come together and really face ESG and climate issues with our best endeavors, with best practices, focus our resources on it, I think eventually this will, it's not just about ESG reporting. Eventually this whole world will be a more resilient world, more resilient economies and companies will come from it. And so as portfolio manager, we're always looking for companies that are on this same journey with us.
Great, thank you very much, Agnes. Agnes, Leonie, Kate, Sabrina, thank you very much for your contribution today. I mean, sometimes when you look at the news, when you look at Australia burning or the Amazon or the Arctic, you get it's easy to get pessimistic about the future of the world, the future of the environment. After this panel, I'm a little bit more optimistic. I think it looks like we are moving definitely in the right direction. We are moving with one of the main actors in the right direction. I mean, the finance industry, it's really now moving into investments in a better world, in a better economy. So I guess that's the right way of moving back to the physical audience in the Hyatt Hotel in Kowloon. Unfortunately, we're not there. But hopefully early next year, when we all have vaccinated as well, we meet again in the next HERA physically. But for now, thank you very much again. Thank you, audience. Thank you, people in online. Have a great day and up to a better ESG future. Thank you.
Thank you.